Hello everyone, friends. This is Mozart speaking. This morning, I want to record another video. More as a warning that the current growth is already quite serious. And what I'm going to show you might make some of you think, while others, I don't know, might not. But these are already quite significant numbers. This will be more relevant for those who trade intraday. For those who trade, like me, on a daily or weekly basis. It's less relevant, but still very important. Regarding the chart, unlike yesterday's video, I won't be going into much detail. Nothing has changed here. It's all the same. I've provided all the entry points for Bitcoin, Ethereum, and Solana. They're all in the Telegram channel. So, I won't be duplicating them here. If you're not subscribed to the Telegram channel, I recommend you do. There, you'll find the complete trade management. 100% the link to the Telegram is in the description below this video. Here, it's probably more important to look at the weekly close rather than the daily. The weekly closed well. Basically, a solid, huge bullish candle. The close is in the upper third. Volume is above average, though not significantly higher, but still above average, and in principle, all targets remain the same. The nearest target is the upper boundary of this range, around $85,000. How it will get there is still unknown. It might consolidate like this, or through a correction, and so on. But, in any case, the chance that it will cover this candle is very unlikely. That is, it will go below this candle. The question here is whether there will be a correction or not, and how far it will go. To the middle of the candle, it might go a bit lower and then head upwards. You can't predict here, so I've just set limit orders in case of a correction. This is Bitcoin. It's all clear here, explained yesterday. Altcoins. They closed well. The target is $720 billion. The candle closed at $721 billion. It's a strong close. I showed this yesterday. Here's the correction somewhere around here. This is a good entry point for altcoins. If it gives this correction, this is total 3. It's the capitalization of all altcoins excluding Bitcoin and Ethereum. It's clear that each of the coins will have its own entry points. There's just one small diagonal resistance left here. You can see it from the weekly peaks. They are here. Here are two extremes. This is the resistance. I can draw it like this. We've hit it. And it's quite likely, well, it wouldn't be surprising. If this happens, we could consolidate right here. We might squeeze into a little triangle and shoot up further. Possibly. I won't speculate right now, but this scenario happens often. Either we'll have a correction and then go straight up. The targets remain the same. The nearest target here is 770, 780, and 800, 820. After that, we'll need to see how the ice comes in here. So, if total tree were to come here straight away, without long consolidations, then there's likely to be a deep correction here. And then to a new high, to update the March highs. But if we linger here for a few weeks and then move up, that would be a divergence, and then a deeper pullback could be possible down here. So here, I will look at the actual fact of how total 3 arrives there. And Bitcoin's dominance, that's quite important too. Last week it closed bearishly. There was a complete absorption of dominance, with volume nearly double the average. So, not bad. The channel is upward. The target for the channel is the lower boundary. At least distribute altcoins at 57.5, at least here. For dominance, this will also remain a globally upward trend, just to go to the lower boundary of this channel. Even here, if dominance comes here, it will already be there. They will stamp out enough altcoins. Some will make 2 to 3 times their investment. Right. That's regarding the technicals. The most important thing I wanted to mention is Bitcoin's current position, which is the blockchain. Look. This here is our chart of realized profit adjusted for so-called organizations. So here we do it wisely, excluding the influence of exchanges and large wallets. That just transfer money to each other without selling it, focusing on pure buyers and sellers. Adjustment. The first chart shows the net realized profit or loss. Well, it's clear that there are currently no losses in the system. It's mainly profit at the moment. That is, as of yesterday, a profit of $3.3 billion has been recorded. So, for comparison, this figure is already close to the peaks in March. We disregard all of this because it was just money being transferred by mt.gox. Here in the blockchain, this doesn't exist, and when the money reached the mt.gox wallet, it was still in 3-digit figures. So, this doesn't exist, it doesn't affect the market. And this is what affects the market. We're already approaching the March highs. Yes, in March the first fixation was above $5 billion, but nonetheless. So, the net profit is already very close indeed. Here, the formula is simple. We take M2 minus M3, that is, we subtract losses from profits. It's clear that there are no losses, right? This is net realized. So, it results in one profit with such growth. Next chart. The same applies here. We take only the realized profit, but smooth it out with a 7-day moving average to eliminate fluctuations, so it's the so-called profit avalanche, the accumulation of profit. So, now with the 7-day moving average, we've arrived at an estimate of the average profit for the week, which is nearly $1.5 billion. At the March peaks, this figure was around $2.5-3 billion. That is, twice as much if we roll back to 2021. The March peaks generally coincide with the profit realization peaks of that year. Yes, it's clear that the price went further. Then there was a divergence in profit and a deep crash. Right now, we are accumulating this profit. The net profit, without smoothing, can also be compared to 2021. And here, basically, the picture is the same. Without smoothing, here's the current profit value. The daily realized profit here are the peaks from 2021, and we can see the divergence at the March peaks that we've marked out. So, essentially, we are approaching the local lows in profit, and this isn't a trend reversal but rather a local pullback. And note, I'm not saying that right after this video, there will be a pullback and everything will crash. No. It might even continue to rise because the market is very strong. This profit isn't at its highs yet. In March, it was $5 billion. Right now, it's around $3 billion. It might reach $5 again. What I mean is that the likelihood of a pullback is increasing with each new criterion. And if we're talking about a reversal, we need to wait for something like what happened in 2021. And in March 2024 here, that is, a divergence in profit. That is, profit is decreasing while the price is rising. A discrepancy. There isn't anything like that at the moment. We've just seen the first wave of profit. Moving on to something interesting. This is the so-called. So here, the dominance of profit is not absolute numbers, but relative numbers, meaning we divide realized profit by realized loss. Currently, the profit share in the market is 1587, which means realized profit is almost 1,600 times higher than realized loss. If we look at this, the March peak was around 1,700 to 1,800 in relative terms, and comparing it to 2021, these are essentially the same highs. Here's the current value. There it is. There you go. Here are the highs from 2021, very close together. By the way, the highs from the same year were before the global downturn. And the March highs. Now we have reached these levels, I'll reiterate. We arrived with the first wave. Typically, after the first wave, there is a correction, whether small or large. A correction, the indicators cool down, and then the next wave of growth comes, and then there might be a third. And at this time, the indicators start to show divergence, including all blockchain metrics, both in terms of profit and in absolute and relative values. And when we see this, then we can talk about exiting the market. For now, the focus is purely on a correction, and the likelihood of a correction increases with each new value that I show you. Moving on a positive note, I shared this chart in the Telegram channel. The trading volume in Bitcoin futures across all exchanges is starting to rise. It has emerged from a prolonged consolidation and currently totals around $61 billion as of yesterday. That's quite a lot, although it's still a fair way off from the March highs. So, in March, it was at $73 billion. Well, it's not that it's too much, but there's still room for growth. Moving on, options activity is at the highs of March. That is, the open interest in options. In March, the peak was $30 billion. Now it's $28 billion. In principle, it's already comparable to the peaks in terms of profit. Next, specifically regarding altcoins, I shared this chart before the altcoin pump, which is why I believe altcoins will rise. After that, altcoins surged significantly. Well, just take a look at Cardano, for example, and Solana. You can also look at Sway. Here, this is the corresponding chart. The orange lines represent inflows into ETFs, and this histogram is in a bluish-purple shade. This is the open interest on the CME exchange. The larger this delta is, meaning the greater the deviation of inflows into the spot ETF from the open interest, this delta, this difference, essentially, indicates the potential amount of money that could be sent into altcoins. Typically, this money is first sent to the top altcoins: Ethereum, Sway, Solana, well, the market headliners, all the main ones. And then they move from there when it's already at that point. It's very difficult to move the market when it's already at highs, and right now, Sway is effectively at historical highs. Yes, this money starts to flow into areas where it's easier to move the market. As for Cardano, I don't know what will happen next, but, for example, Litecoin might finally take off, and Ripple, possibly, could go there. And into everything, NI, ICP, Phil, ZIL, Muriel, anything. All of it will go there eventually. The greater this difference, the more money will go to the altcoins. Right now, this difference was at its maximum around the 3rd to 4th of November. Then, the market hedged with options. That is, before and after Trump's victory, and the open interest on the CME exchange rose from $1.8 billion to $5 billion. That's more than double. It has narrowed a bit, although we don't see inflows yet, because it was the weekend, as of the 8th of November, that is, Friday. The inflows, over 30 days, that's the orange curve, the net inflows over 30 days were nearly $8 billion. Let's see how it opens today. There have also been a lot of inflows recently. But for now, this gap is widening, which is much better. And this is fuel for altcoins. So take a look at how it was right here, for example, right here, now. Right here, that is, they were equal, the so-called carry trade, when money was earned solely on the annual rate. But I wrote all about this in Telegram, what it means. If you're interested, have a read. Not now. Now there is an inflow of new money into the system moving on. Globally, these are just inflows, that is, aggregate, market, realized, value, net position, change. Here it's just about acceleration. No discrepancies, nothing here. The 30-day cumulative net inflow amounted to, that is, positive capital inflows, $36 billion. It's accelerating, everything is great here. So this is purely a medium-term trend. And that's why I don't think that if there is a strong correction now, it will be the end and we won't see higher. No, most likely we'll see at least 85. This correction will simply be a good opportunity to enter. That's why I'm placing limit orders lower. I'm not entering from the current levels because I don't know where this correction will start. And these charts on realized profit confirm my words now. But during the correction, I'm ready to re-enter with a reasonable stop loss and take profit. Well, and liquidations. This is also another reason that brings the correction closer. Yesterday, I showed the divergence in the video. That is, at each new peak, liquidations are getting fewer. By the way, it's interesting about the average leverage in the system. Yesterday, shorts worth $1 billion were liquidated, and net liquidations, I see right now, are about $88 million. So the average leverage across all exchanges was around 11, fluctuating between 10 to 12. Roughly 11 Just imagine, with the same leverage, on the night of November 6th, $140 million was liquidated. I apologize, I meant millions. So practically $1.5 billion considering the average leverage. But here, that's not important. What's important is that with each new price peak, we have fewer liquidations. That is, the fuel for growth is running out. And if the asset has nothing further to go on, that is, there isn't such a mass cascade of liquidations, closing short positions, and closing a short is essentially opening a long, meaning it's a purchase. Buying at market price, via limit orders, at market price, however it's executed, whether by hand or limit order, it doesn't matter, we are left with only profit in the system. And the asset doesn't move on, and this profit starts to be realized. The asset begins to correct itself until it finds a new support level. Then shorts will accumulate again at the top, which will protect their level, and from there we can move on. Well, it's the standard market system. That's it. Basically, that's all I wanted to say. To summarize, the situation is starting to become quite tense in terms of uninterrupted growth. Hear me out first and foremost. And the likelihood of a correction increases with each passing day, while we remain stagnant with not a single red candle. The probability of a correction is high, but that doesn't mean it's the end of the growth. This is the first stick, a huge stick, but the first of the wave. A halt in growth and a reversal into a global downtrend, or a very long correction at 23.38 on the Fibonacci, something like that, will occur after the divergence. Both in terms of profit and open interest, as well as liquidations, inflows into ETFs, and so on and so forth. Therefore, the correction that will happen now is better used to accumulate new long positions. Right now, if you're trading, for example, intraday, keep in mind that a lot of liquidity has accumulated below. I'm not talking about levels of $50, $60, or $70,000. I'm talking about the nearest liquidity on minute timeframes. $78,000, $76,000, $75,000, up to $75,000. As we know, the market doesn't move towards greater liquidity. It moves towards the nearest liquidity, regardless of whether it's above or below, because it's easier for it to get there. So keep that in mind. That's all. Thank you all for your attention. Have a great week, everyone. This was Mozart, and goodbye to all.